time for a cash tag segment. For that, let's bring in Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thank you. It's great to be here.
All right. So, Landon, we were talking basically credit cards and fintech today. We're talking American Express. This one's lagged Visa and Mastercard. It seems like the resiliency of that upper echelon consumer kind of waning here a little bit. I've seen some analysts come out recently lowering price targets on this name. What kind of data do you guys have out of Likefolio that may support the weakness or may support maybe a rebound in the name?
Sure. You know what? I mean, when you look at this name, last quarter they came out with some pretty strong numbers. I mean, they are driven by their affluent card holders, and they've seen a plus 8% year over year in card spending. People are spending more. I think a lot of that has to do with the resurgence of travel, entertainment coming back. People, their customers, generally speaking, have a demand for more premium products, so they're spending more. In fact, they're one of their highest growing segments is the Gen Z and millennials, which was plus 21% on a year-over-year basis for them. They had record revenue, plus 12% on a year-over-year basis, up to $15 billion, but they held their annual forecast. They didn't increase their forecast, which I think disappointed a lot of investors, and the stock reacted, about, I think it was negative 5% on earnings. And if you look at how well they've done since just before those earnings, they're down about 13% since just before the last earnings. We've got earnings tomorrow. So this is an interesting setup for this one because they nailed all their numbers, but they didn't give that guidance optimism that everybody wants, right? And it's great to know you made money last quarter, but how's the future looking? Because that's what's really important. So I think investors really punished them on that. But when we look at the data, I mean, it is basically affirming what their numbers were and we believe will continue. So we've got web visits at plus 10% on a year-over-year basis. We've got it at plus 25% on a year-over-2-year basis. So it's doing much, much better than it was. It's right at all-time highs. A lot more people are going to the site, registering, getting their cards. Their happiness is extremely high. It's about 70%, beating their peers, Discover, Visa, and Mastercard. All of them, they're beating Discover by about 2 points and Visa, Mastercard by about 7 points. So they've got the happiest, most loyal customers who are spending the most amount of money, but some of that, just kind of like you talked about, it's kind of baked in. They have been in the news recently because of the Delta Amex, I guess you could call it a hiccup. It depends on how you look at it, right? I mean, they've got this card that allows people to get into the Sky Club at airports, and depending on, your different levels, and they're basically saying, you know what? It's been so successful, that program, that we've got to pull it back. The Sky Clubs are becoming too crowded, and now they're raising the bar on what it takes to get in, and some people are unhappy with that. But that's what happens when you have so many people signing up. So our data is showing continued success from American Express, and the fact that they're down about 13% since before the last report, that just makes it a little bit better entry from my perspective. So I'm bullish going into this earnings report. I hope that they lay off the Debbie Downer guidance that they had last time, which it wasn't Debbie Downer. It was just wasn't optimistic, right? They killed it. They knocked it out of the park on numbers, and they just didn't say, hey, we think it's going to continue and we're going to continue to grow. So if they continue to grow, and we believe that they have, grown over the last three months. I hope that they can say that and have some confidence moving forward with guidance. And then I think this is a nice entry for a position going into earnings.
Landon, when we talk about Visa and MasterCard, we almost have a Boeing Airbus discussion like that. But really, American Express is a major player in this. But why do you think they're not mentioned so much? Is it because they hold the balances that Visa and MasterCard don't handle? Because their valuation is half what these other, the PE of American Express right now is just over 15, Visa 30, MasterCard 36. So what is it that's making them, because if there's bad news, if there's suspected bad news in the future, Landon, it's all baked into this stock already.
I agree. I think I agree. Look at the valuations. It doesn't make sense. You can argue about how many customers they have and what they spend and all that, but the PE ratio, just like you pointed out, that's the key. And to be half of its competitors really, to me, just says that there's so much bad data priced in, and we don't see any bad data. So I think that they could surprise investors here with just continued success, just like they had last quarter. And I think they could shake off a lot of, a lot of fears out of people. And you realize all of a sudden you look at that PE ratio and you're saying, wait a minute, 15 is a pretty good deal here considering where Visa, Mastercard are. So yeah, absolutely. I'm bullish going into this, not, pounding the table, but it's a strong number. Our earnings score is plus 29. Which puts it firmly in the bullish camp. We're willing to take a bet on it, and a lot of that has to do with the price action. If this was all-time highs, we'd probably be pretty neutral on it. But the fact that it's sold off significantly over the last 3 months, it tells us that, just like you said, expectations are low. And when I'm bullish, I love low expectations. That's like sandbagging. It's easier to beat those numbers.
Yeah, that hurdle is going to be easier to jump over due to the fact that stock's only up 2% so far this year, so it's lagged the S&P 500 as a whole, maybe not the equal weight. But when you look at those happiness levels and going into an earnings score here, Landon, it seems like it blows. I'm surprised that Visa is so far below what even Discover is at this point. Is this because of the reward aspect of it, or is it because of that affluent consumer that's using the American Express card?
I think it's a little bit of both. I mean, American Express has better rewards because they charge merchants more. I mean, it is, if you had a sliding scale of where people were favored, merchant versus customer, American Express slid their scale way over to the customer side. They charge merchants more. They have automatic chargeback wins. There's a lot of things I've experienced running a business that I don't like as a merchant dealing with American Express, but as a customer, I love American Express. So that's why they're so high. I can't tell you exactly why Discover's beating Visa so much there. About 5 points, I agree that is pretty significant. I wasn't surprised to see American Express at the very top. I would have expected the other two to be a little bit closer, but the gap between American Express and Visa at 7 points absolutely makes sense to me. Better perks, just better rewards, better customer experience. And it's just, it's a great product to use as a customer. We'll see what happens, if too many people are upset with this Delta thing. I think it's going to kind of blow over a little bit. But other than that, yeah, I think happiness is really key. They've got happy customers who make a lot of money and spend a lot. I mean, that's a great company to invest in.
All right, great stuff, great data. As always, a little bit bullish here on American Express into earnings. Thanks, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan, co-founder at Likefolio, breaking down the data.